In this video, guys, we are going to look at what is the best time frame for day trading. Stick around. Hey traders, warm welcome to you. All right, so if you're a day trader, you're kind of asking yourself, hey, what time frame do I trade? Most charting platforms give you numerous different options. You go right down to kind of tick charts, range charts, 1 second chart, 1 minute, and you kind of, well, what is the best to trade? So I'm going to give you a kind of framework to work from, and then you can decide, give you some ideas and options, and you can kind of choose the way that you want to approach things. So I always think of this kind of top-down approach in this quadrant. So really, as a day trader, you might be saying, hey, do I really need to look at the higher time frames? And absolutely, yes, you do. And the idea of this is you start on your higher time frames, you work your way down, and then there's some intricacies and details that you use on these lower time frames that are going to help you make your decisions. We'll talk about those in a moment. So you start off on the higher time frame and you look at the bigger picture. And this is when you go, okay, this is my kind of first time frame, and this is normally going to be a daily chart. There are some arguments maybe to say that daily is too high, but I think daily is good because daily chart meaning one candle equals 1 day. I think that's good because you kind of understand what the bigger players are doing, and you can understand the rhythm of the market and the structure. So I always recommend kind of starting on the daily. Now, bearing in mind, you're only observing these briefly at the start of the trading day. For a day trader, you're working off these lower time frames kind of actively during the day and kind of primarily on your real lower time frame. But I'm going to give you this framework because it's important not to neglect and not to get focused and zoomed in on this. So here I would always recommend using a daily chart, and that's going to show you kind of, okay, look, and then this is just an example here. Oh, we've gone along, we've broken out of a key range, we're ranging again, and then we've broken out again. So you can kind of see the structure of the market, right? It looks reasonably bullish. You might say, okay, a little bit of a pullback and continue long. We've got a good uptrend here. We've got a range environment here. Maybe there's some support. You start to kind of structure it. And then you move over to another time frame. Now this is where you can play the game a little bit and go, okay, how detailed do I want to be? You can for me, there's two choices. You go to a 60 or a 15. So an hourly chart or a 15-minute chart. And that gives you kind of a zoomed in view of a section of that daily. So this here would be a zoomed in view of this. And so now you're kind of structuring and seeing the most important part. The daily is giving you the roadmap, if you like, that's the kind of direction, and going, okay, I think we're strong. We might be a bit extended here. You can argue all these different things, but you get a feel for what's happened, right? You get a feel for where the money flow is occurring. This now zooms you in to multiple days, that is, or a couple of weeks to be fair, of the most recent action. And so you can start to frame it a little more and see it in a bit more detail. And again, you're not going to spend ages on this, but you can start to say, okay, look, I've broken out this range. That's a key range. Do we come back and test this level here? Or do we come back in? Is this a fake out? You start to formulate some of your ideas over a period of multiple days. Now, you're not going to trade that. You're a day trader, but you start to then position, because if this price starts going lower, you know that there's a key level here at the top of this range, because you've seen it on the daily, you've understood it, and even gone lower on the 60-15, which then will show itself out in these lower time frames. So you're starting off there, and this top level is just to review and to guide you so that you're staying on the right side of the market. An example is, unless you were trading some specific exhaustion play, you probably wouldn't be shorting on this breakout here. Or you'd at least be letting it to run first before you kind of committed to a mean reversion short. So it's just keeping you on the right side of the rhythm and the structure and understanding your higher time frame levels. Okay, so there, now you go, the question really is, what's the best time frame? And most people think of it as like these down here. What should I be trading from? And so then you're going down, and really I think there's an argument here to say that could be maybe a 3, 5 minute or 3 minute. I like the 5. I just think there's a nice structure to it. I like going daily, 15, 5. Daily 65, fine, but these are the options you've got. And this then now is zooming in a little bit more. This would be a zoom in of this part here, right? this section here. So that was a zoom in of this section. This is now a zoom in of this section. That's how it's. So now you can see the intricacies and the candle detail of how that breakout actually occurred. Did it kind of break out cleanly? Did it come back? Did it pause for 10 minutes before going on? You wouldn't see that in a 15-minute chart, because all you'd see is a 15-minute candle. If it paused for 10 minutes and then broke out, that 15-minute candle would just be a long green candle. On a 5-minute candle, you're going to see some chopping around. Does that influence your decision? Maybe it does, maybe it doesn't. But that's how you're kind of going to operate. And then you're going down to your execution chart. So this is the chart that you're going to pull the trigger on and going to be watching the most. Now, I think going anything lower than a 1 minute is a mistake. Personal preference. I know some people who go down to a kind of 15-second, 30-second. I think you've got to be super actively scalping for that and be very specific about what you're looking for. I think most of the time a minute is going to give you all the information you want. And just a summary, that minute is going to be this section here, right? This breakout. So we've kind of opened up in the day or whatever it is, and then we've broken out. And so you're seeing the intricacies of that breakout, saying, hey, do I want to fade that? Do I want to wait for a pullback? What is it? So you've kind of conducted this rotational analysis and you've gone from your higher time frames. Like I said at the beginning of the day, you center yourself with this, and then during the trading day, you're kind of working off these two things here. And really what you're doing is you're saying, okay, whatever you pick for this, and like I said, I'm hard pressed to listen to an argument that suggests going lower than that unless you're very, very specific, in which case you probably wouldn't click on this video and go, okay, I know I want to trade from the 30-second chart. But you don't want too much noise, but you want enough detail. So that 1 minute chart, if you're an active day trader, is where you would consider executing from. But there's a little trick. If you keep your 5 and 3 on your main screen, and to prevent you from over trading, you just say, hey, those are the levels, this is the kind of trade idea I've got. You've got your trade ideas written down, you know where you want to get involved, you know the play you're looking for, the setup, the strategy, all these kind of nuances. And then when the market approaches that and it looks like it's about to trigger the trade, you go down to your lower time frame, your 1 minute, again 30 seconds if you really wanted to push it, and go, okay, what are the nuances of the subtleties of the candlestick patterns I want to see to trigger this pattern? And so what you've done is you've given yourself the best possible chance of success. You've checked and dialed this to your top level timeframes in, done for the day. Don't need to worry about those again, unless we do some kind of really big move that brings these levels into play, which you can flick them up at any point in time. But then during the trading day, you're kind of executing from this, but you're monitoring this. I think the trap that many traders fall into, and I've done this myself, is you're so myopic on this lower time frame, you miss out on the bigger picture. And so you're watching this going up, 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 and you're thinking, well, you know, it's going to be fading, this, should we be doing that? And you don't really have any kind of direction and a compass. And so this is why you calibrate yourself at the start of the trading day with this, and you say, right, actually, I'm going to keep this 5 and 3 up to see what's going on in the day, I review it. And because most of the time, guys, you've got to accept, even as a day trader, there's times when you just need to sit on your hands, and that's going to be the majority of the time in the trading day. You know, the time you execute should be few and far between. You should be very specific and sniper-like in your approach. You should know what setup and strategy you're going to deploy, and you should be waiting for that on this kind of low time frame here, but not right on the execution time frame. The execution time frame is for fine-tuning the nuance and the detail. It's not for looking for trades. You know, it's a zone of interest that you've got that you build up from here, and then you go into here to execute. You don't find your zones of interest in areas to do business from this lower time frame chart. So, best time frame for day trading. I think if the top-down approach is the right way to do it, it works for me. I like doing this, and I know that many traders do this, and many traders fall into the trap of just looking at that and it doesn't serve them. So, your daily, I'd say daily, 15, 5 and 1, or daily 60, 5 and 1. Now, one final thing, you can adjust this and adjust these to suit the current conditions. If the market is suddenly broken out of a range and there's much more interesting stuff going on, you might want to tighten things up, and a 15 is going to give you less time, but it's going to give you more information. So you might kind of go, oh, sometimes you use 60, sometimes you use a 15. The downside of that is you can't really then calibrate yourself and see the patterns. If you're fixed and you know what you're always looking at, and you know what you're always, the time frame of the chart, you start to see some of the nuances and patterns, and you appreciate what they actually mean, because that candlestick is always going to be the same amount of time. It's always going to be 15 minutes, always going to be an hour, whatever it is. So That is a downside to that, but sometimes you might have to kind of look at a higher time frame or drag things out a bit to get more information in. So higher time frame, moving in daily, 60, 5 and 1. And like I say, being careful not to get too myopic with the 1, using that as a scan, using 1 as to fine tune your trigger. Hope that's helped. What is the best time frame for day trading? My opinion. Take care. See you next one, guys. Bye-bye.